Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover JPMorgan CEO's stance against crypto, recession fears, stock analysis, advantages of renting, warnings of upcoming recession from bank CEOs, oil and gas prices, minimum wage increase, Google's AI model, TV bundle comeback, Germany's stock market, shifts in tech stocks, Tesla safety concerns, Walmart CEO's predictions, McDonald's expansion plans, AbbVie's acquisition, the benefits of renting over buying, and Warren Buffett's advice on financial stability.
So here's the latest scoop on the economy and news. Brace yourselves, folks, because the bank CEOs are sending some warnings our way. According to Citigroup CEO Jane Fraser, a recession is looming over the U.S. What's to blame? Well, she points to persistent inflation in services, rising debt levels, a slowdown in global growth, and not one, but two major conflicts in Europe and the Middle East. Yikes! But wait, Jamie Dimon, the CEO of JPMorgan Chase, seems to be on the same page. He's sounding the alarm bells and saying that inflation could rise even further, and a recession is still very much a possibility. Talk about a double whammy. On another note, the oil market is getting pretty wild. U.S. crude prices have taken a nosedive, sinking below $70 a barrel for the first time since July. This has experts buzzing and making bold predictions. They say we might be seeing gas prices dip below $3 a gallon. I sure wouldn't mind that. Speaking of numbers, let's talk about the minimum wage. Brace yourselves again because it's set to increase next year in selected states. It's about time, isn't it? Now, let's take a sneak peek into the global arena. Google is making waves with its new AI model called Gemini. It's their most advanced one yet, and it's all part of their mission to compete with ChatGPT. The tech race is getting intense. Oh, and guess what? The TV bundle is making a glorious comeback in this streaming era. Looks like good old-fashioned TV isn't going anywhere just yet. Last but not least, Germany's stock market is celebrating as it's hit a new record high. Time to raise our glasses to that. There's a lot going on in the world of stocks, so here's a little roundup for you. In the tech sphere, we've got some interesting news. Meta, OpenAI, and Microsoft have announced that they'll be using AMD's newest AI chip, the Instinct MI300X, instead of NVIDIA. This decision could really shake things up and change the power dynamics in the industry. Speaking of Meta, they've got big plans to make Messenger more secure by rolling out encryption. Unfortunately, it seems like Elon Musk can't catch a break. Tesla's safety is once again a topic of discussion, and now Norway has joined Swedish workers in boycotting the company. On a more positive note, there's a growing interest in electric vehicles among Americans, and Elon Musk is even looking to raise a whopping $1 billion for his XAI firm. Shifting gears to food and retail, Walmart's CEO believes that next year will be challenging for the retail industry. However, McDonald's has some exciting plans in store. They're aiming to open nearly 9,000 new restaurants and add a whopping 100 million loyalty members by 2027. Plus, they're introducing bigger burgers in the future, and they've recently opened their first Cosmos's spin-off restaurant. Now that's something to feast your eyes on. Finally, in the world of medicine, AbbVie has announced its acquisition of neuroscience drug maker Cerevel Therapeutics for around $8. $7 billion. They're shelling out $45 per share for Cerevel and expect to complete the acquisition by the middle of 2024. So, when can renting be better than buying? Well, according to our subscribers, over 70% would choose buying over renting if they had all the money in the world. This is because people tend to believe that buying builds wealth, while renting only makes others richer. And in most cases, this may be true. But let's consider today's scenario. Interest rates are at an all-time high and prices are skyrocketing. However, there has been a recent jump in mortgage refinance demand due to falling rates. So why is renting better than buying? For starters, renting is hassle-free. You don't have to worry about maintenance or repair bills. Additionally, it can save you money. A renter's insurance policy costs significantly less than a homeowner's insurance policy. Renting also makes budgeting easier. You pay a fixed amount of money per year, whereas mortgage payments can fluctuate, especially for those with adjustable rates. Property taxes can also add to the cost. Flexibility is another advantage of renting. You can easily move to a bigger or smaller home based on your requirements. Owning a property doesn't often offer this kind of ease. Renting offers peace of mind. You don't constantly have to worry about falling property prices. On the other hand, renters don't enjoy any perks when prices go up, and landlords may increase rent with notice. This price change can also impact mortgage payments and insurance. Moreover, renting requires significantly less money up front. The security deposit is typically much lower compared to the amount needed for a down payment. Now, what if you have the money? Even then, it might be a better idea to explore other investment options such as stocks. Real estate historically hasn't offered the same returns as the stock market. This suggests that investing in stocks could be more profitable than investing in property. At the end of the day, the choice between renting and buying is yours to make. There are certainly benefits to investing in property, but also valid reasons for considering renting. Even experts like Ramit Sethi, a self-made millionaire and star of Netflix's How to Get Rich, believe that home ownership is overrated. Hey, have you heard this awesome personal finance quote of the day? It goes like this: "The most important thing to do if you find yourself in a hole is to stop digging." And guess who said it? None other than the legendary Warren Buffett. Now let's break this down. Imagine you're in a financial hole, whether it's due to credit card debt, overspending, or poor investments. What do you usually do? Well, some people might keep spending recklessly or taking on more debt, hoping things will magically improve. But that's where Warren Buffett's wisdom comes in. He's telling us that continuing down the same path won't lead to a way out of the hole. So what's the solution? Stop digging. It may sound simple, but it's crucial to stopping the cycle of financial trouble. Instead, take a step back and assess the situation objectively. Analyze your expenses, cut back on unnecessary spending, and create a plan to get back on track. By heeding Warren Buffett's advice, you're acknowledging the need for a change and taking responsibility for your finances. Remember, it's never too late to start afresh and make better choices. So, the next time you find yourself in a financial hole, remember to stop digging and start building a solid foundation for a brighter financial future.
On this episode, we discussed the JPMorgan CEO's view on crypto, recession fears, advantages of renting, upcoming recession warnings from bank CEOs, tech stock shifts, safety concerns for Tesla, and Warren Buffett's advice for getting out of a financial hole. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.